Welcome to XRP Pro Ledger, and today we are going deep on two developments that happened within days of each other that most people in this community are reading as separate stories, when they are actually two sides of the same institutional thesis. Peter Brandt said it first. One of the most respected veteran traders in the world, someone who has been analyzing markets professionally across commodities, equities, and Forex for decades, was asked to name his favorite pick for becoming transactional, and he said XRP. His exact words. If you had a bet on a horse to become transactional, it would be XRP. And within days of that statement circulating, Japan's financial services agency finalized rules that give RLUSD, Ripple's regulated stablecoin, full regulatory clarity to operate as a legitimate electronic payment instrument in one of the world's largest economies. I want you to stay with me through this entire breakdown, because at the 7-minute mark, I'm going to show you exactly why Peter Brandt's transactional thesis and Japan's regulatory action are not two separate developments. They are the same institutional conviction expressed in two completely different ways, and why both of them arriving simultaneously with the Clarity Act's August 10th deadline creates a picture that most retail participants are not connecting. But first, let us establish who Peter Brandt is, because the community's reaction to his XRP statement depends entirely on whether you understand who is making it. Peter Brandt is not a crypto influencer. He is not a YouTube analyst. He is not a community cheerleader. Peter Brandt is a commodities and markets veteran who has been analyzing price structure and fundamentals across every major asset class for decades. He is the kind of analyst who institutional desks pay attention to, not because he makes bold predictions, but because his track record of reading market structure over long timeframes is among the best in the profession. When Peter Brandt says that if you had a bet on a horse to become transactional, it would be XRP, he is not making a speculative price call. He is making a structural observation about which asset has the infrastructure, the regulatory positioning, and the institutional adoption to function as a genuine transactional settlement layer in the financial system that is being built. And the word transactional is precise. He is not saying XRP is the best speculative trade. He is not saying XRP will go to a specific price by a specific date. He is saying XRP is the asset most likely to become used as actual money, as the bridge asset that moves real value between real institutions in real time. That distinction matters more than most people realize. Now let us talk about what Japan just did, because the regulatory development that took effect on June 1st of 2026 is being misrepresented across social media in a way that actually understates its significance. Japan's financial services agency finalized amendments to Cabinet Office ordinances on May 19th of 2026, creating a clear regulatory pathway for foreign-issued trust-type stablecoins, explicitly including Ripple's RLUSD, to be treated as electronic payment instruments under Japan's Payment Services Act. These rules took full effect on June 1st of 2026. Now here is what the community is getting wrong about this development. Social media has been calling this RLUSD becoming legal tender in Japan. That framing is inaccurate. Only Japanese yen has legal tender status in Japan, but the accurate framing is actually more significant than the legal tender framing. Legal tender status means people are required to accept it. Electronic payment instrument status means institutions are authorized and regulated to use it for payments and remittances across Japan's $4.2 trillion payment ecosystem. One is a requirement. The other is infrastructure. And infrastructure is what builds institutional adoption at scale. Japan's economy is approximately $4.2 trillion. It is the world's third largest economy. It has the world's largest retail foreign exchange market. Its retail investors have been trading FX for decades in a low and negative interest rate environment that has systematically eroded yen-denominated savings. RLUSD operating as a regulated electronic payment instrument in Japan means that Ripple's dollar equivalent stablecoin now has full legal authorization to move through Japan's payment infrastructure, to be distributed by licensed Japanese payment service providers, and to be used for cross-border remittances and institutional settlements in one of the world's most financially sophisticated markets. And Ripple already has the distribution infrastructure in place. SBI Holdings, Japan's largest financial conglomerate, signed a major partnership with Ripple in August of 2025. SBI VC Trade, the subsidiary that is Japan's first licensed electronic payment instrument provider, began distributing RLUSD in Japan on March 31st of 2026. The regulatory clarity that took effect on June 1st did not create a new partnership. It removed the legal uncertainty that had been limiting how aggressively SBI could scale the distribution that was already underway. Now let us talk about why Peter Brandt's transactional thesis and Japan's RLUSD regulatory action tell the same story. Peter Brandt said XRP is the horse to become transactional. Japan just gave XRP's settlement layer, RLUSD, running on the XRP ledger, full regulatory authorization to be used for transactions in the world's third largest economy. These are not two separate data points. They are the same institutional thesis confirming itself from two completely different directions simultaneously. A veteran market analyst looking at infrastructure and positioning said XRP is the transactional asset. A G7 sovereign government looking at payment system stability and regulatory compliance said RLUSD on XRPL is a legitimate electronic payment instrument. Both of them are describing the same underlying reality. XRP is being built into the infrastructure of the global financial system, transaction by transaction, regulation by regulation, market by market. Now let us talk about the Coinbase order book data, because it adds a supply dimension to this picture that most people are not connecting to the Brandt and Japan developments. Analyst Dom published a Coinbase XRP order book heat map on May 28th and 29th, showing buy-side liquidity approximately 7 times heavier than sell-side liquidity in the larger order bands. 7 times more buying pressure than selling pressure on the largest regulated US crypto exchange. This is not a retail phenomenon. Retail investors do not stack 7 times the buy-side liquidity on Coinbase order books. This is institutional bid accumulation. The same institutional participants who read Peter Brandt, who track Japan FSA regulatory developments, who are watching the Clarity Act advance toward the August 10th Senate recess deadline. They are not chasing the price higher. They are positioning below current price and waiting. Now let us connect all three signals to the supply picture. Exchange reserves have dropped from 3.76 billion XRP to approximately 1.66 billion XRP since October 2025. That is a 56% decline in liquid supply in under 8 months. 7 times buy-side Coinbase liquidity, arriving into a market where exchange supply has been compressed by 56% from institutional participants who are positioning before both Japan's June 1st RLUSD rules and the Clarity Act's August 10th deadline. The supply compression amplifies what the order book data is already showing. Now, let us talk about the XLM and DTCC context, because the community has been distracted by Stellar's announcement and losing sight of what it actually means for XRP. On May 27th of 2026, the Depository Trust and Clearing Corporation and the Stellar Development Foundation announced plans to connect DTCC's tokenization service to the Stellar public blockchain. With DTC custodied assets, including Russell 1000 stocks, major index ETFs, and US Treasuries becoming available on Stellar. The timeline for this is the first half of 2027. Not today, not this year, the first half of next year. And here is what most people in the community missed when they read that headline. The DTCC chose Stellar for one part of its multi-chain tokenization strategy. The DTCC announcement explicitly uses the phrase multi-chain strategy, meaning DTCC is not choosing one chain, it is choosing multiple chains for different functions. Ripple and XRP are already deeply integrated into DTCC's ecosystem through separate pathways. Ripple Prime has direct ties to DTCC infrastructure. The same hidden road that cleared the first CME XRP futures block trade operates within DTCC's clearing framework. The DTCC announcement for Stellar is not a signal that XRP is losing ground. It is a signal that the tokenization infrastructure that both XRP and RLUSD are positioned to serve is being built more aggressively than most people in the community understood. Now I want to address something directly, because this community deserves a rational voice on what Peter Brandt's statement and Japan's regulatory action actually mean and what they do not mean. Peter Brandt has been mixed on XRP in 2026. His transactional comment is one data point from one analyst in one interview, not a price guarantee. Japan's electronic payment instrument status for RLUSD is a regulatory milestone, not an instant adoption event. SBI and other licensed providers still need to scale distribution. Corporate clients still need to activate digital payment rails. David Schwartz has been consistent about this. The bull case for XRP is built on visible infrastructure and measurable institutional adoption, not on single quotes or regulatory events producing instant price responses. What Peter Brandt's statement tells you is directional. A veteran market professional with decades of cross-asset experience surveyed the landscape and identified XRP as the most likely transactional asset. What Japan's FSA rules tell you is structural. The world's third largest economy has created the regulatory framework for XRP's settlement layer to operate legally at institutional scale. What the Coinbase 7x buy-side order book tells you is positional. Institutional capital is accumulating below current price right now. Now I want to talk about what most people in this community are getting wrong right now. XRP is trading between $1.30 and $1.35. Peter Brandt identified it as the transactional horse. Japan gave RLUSD full regulatory authorization effective June 1st. Coinbase shows 7x buy-side pressure. Supply is compressed 56%, and the retail market is looking at a sideways chart, wondering when something is going to happen. A veteran trader identified the transactional asset. Japan authorized the settlement layer. The order book shows 7x more buyers than sellers. The retail market is still asking when. So let us zoom out and see the complete picture assembling right now. Peter Brandt. If you had a bet on a horse to become transactional, it would be XRP. Japan FSA, Electronic Payment Instrument Rules effective June 1st, 2026. RLUSD, legally authorized in Japan's $4.2 trillion economy. SBI Holdings Partnership, August 2025. SBI VC Trade, Japan first licensed EPI provider, March 31st. RLUSD rollout, Coinbase 7x buy-side order book, exchange reserves down 56%, whale wallets 68.5%. ETF, cumulative inflows 1.41 billion. CME, 24/7 trading live. Ripple Treasury, $12.5 trillion platform. Clarity Act, advancing toward August 10th Senate recess deadline. Peter Brandt picked the transactional horse. Japan just authorized its settlement layer. The order book shows who agrees with both of them. If this analysis changed how you are thinking about what Peter Brandt said and what Japan just did for XRP and RLUSD right now, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.